Okay, so next up, we have an incredible keynote speaker. So I want you to know up front that Anaheim found his presentation to be incredibly informative, and people took a lot of notes. His name is Sandy Botkin, and he is the president of the Tax Reduction Institute of Germantown, Maryland, and also the tax director at TaxBot. He'll be sharing some fantastic tax strategies. He's both an attorney and a CPA, and was a former national trainer of IRS attorneys. He's a best-selling author and nationally syndicated writer, and he can also be seen on various national news presentations and heard on several syndicated radio shows. His most recent books are Lower Your Tax Big Time, Real Estate Tax Secrets of the Rich, and Achieve Financial Freedom Big Time. Now, I know some of you are kind of looking at me funny, and you're saying right now, all right, entertainment, I can't wait, this will be great. You brought in an attorney and a CPA to talk to us, right? We're all excited about that. And he's going to talk about taxes, right? Are we excited about this? I want to know that the last presentation that Sandy gave, he actually made it fun. It was very, very informative and very, very enjoyable. So I want you to pay particular attention to him and some things that he says. Because right after his presentation, we have a special announcement to make regarding some things that he talks about. So right now it's my pleasure to welcome to our stage Mr. Sandy Botkin. Sandy.
Doesn't he do a great job? You know, I remember a lot of the, I do a lot of speaking, an intro that I gave in Vancouver, Canada. Welcome, Canadians. And in fact, I'm going to be telling this to you as well, by the way, I'm not leaving you out. But this beautiful girl, I was a master of ceremonies at this home-based business conference, and this beautiful girl came up to me at the end of the conference with a bouquet of roses, and she said, Mr. Botkin, these roses will eventually die, but she didn't speak English that well, unfortunately, but you will smell forever. I was touched. Has anybody I'm just curious, anybody ever had an experience? Oh, I have a bunch of new distributors over here running up trying to learn quickly. Has anybody had an experience of being overbilled for something? Or maybe you had charged in your credit card that you didn't expect was more than you were expecting, or something that's strange that happened. Anybody ever had that situation in their life?
Yeah.
Okay?
Yeah.
How'd that feel? Probably not too good. Would you agree with me that the higher the amount you've been overbilled, the more aggravating it gets? Okay? How many people, by the way, that happened to me. I was in Italy about 25 years ago. I was at a restaurant. I came home and I look at my credit card and I was charged twice for the meal. I was ticked. How many people in this room, when you ever have that happen to you, just let it go and you pay it? If you just let it go and pay it, raise your hands.
Sometimes.
Anybody? How many demand a refund and take care of it on their credit card? Good. I want you to hold on to that feeling because I'm about to make it worse. Alright? Now, another question, and I have a lot of questions I'll be asking you actually. How many people here would rather pay the amount of taxes that they legally owe and not pay a lot more than they legally owe? Would you prefer that? Okay? Just want to make sure. Well, here's the interesting point. What if you as a business person were overpaying your taxes by thousands of dollars every year throughout most of your life? Would you want to know about that? Okay, of course you would. Over the next hour, not only I'm going to prove it to you that that is the case, all right? But don't worry, I have a nice, simple, and easy solution where you're going to be able to keep thousands and thousands of dollars for the rest of your life. And you're probably thinking, oh boy, what's this going to cost me in terms of time, effort, and money? Here's the time. No more than 2 minutes a day. Effort. Go like this. And money, it will actually cost you 0 out-of-pocket expenses. Sound fair? Okay? So let's get started. Now, see what I'll be here. First of all, I'm going to be saying a couple of shocking things that's really going to surprise you. So I want to give you a little bit about my background so you know why I'm qualified to teach you. First of all, I am a CPA, I'm a tax attorney, I'm a former trainer of IRS attorneys nationwide. How many people, when you think of an IRS agent or a Canada revenue agent, how many think of a tax auditor as a rat? Anybody in this room? How many people think of the IRS or Canada revenue agency as a rodent-like organization? Well, I was one of 8 attorneys selected by the IRS to train all of their attorneys nationwide. So if I train them, what does that make me? Head rats. Head rodents. So at one seminar I said, dead rats. I'm actually a pussycat, but I have seen tax on both sides of the podium as a lawyer and a CPA. I've been lecturing for over a quarter of a century on tax and tax reduction financial techniques. I'm a featured tax coach with Donald Trump at the Tony Robbins Wealth Seminars. I'm a best-selling author of a book called Lower Your Taxes, Big Time, and Achieve, my latest book, which is the only 5-star rated financial book actually out there, is Achieve Financial Freedom, Big Time. And I've been a guest tax expert on a lot of media, from CNN, CNBC, and so on. I'm not saying this to impress you. I just want you to know that I know what I'm talking about. All right, first thing. How many people have heard of Susie Orman? Susie Orman, very famous. She's famous for telling people to get out of debt. That's your #1 expense. She's had a whole show on that. And as famous as Susie Orman is, she's somewhat wrong.
That's right.
The #1 expense in North America is taxes. You will spend more on this than food, housing, transportation, and clothing combined. In addition, the next shocking thing, there was a study done, but I believe Harvard, where they wanted to know what percentage of age of people, age 65, can retire with the same standard of living they had before retirement. The shocking answer was 4%. 4% of the people at age 65 can retire with the same standard of living. Well, that means the other 96% have to either reduce their standard of living, live on some form of charity, or just keep working. How many people here want to be in that top 4%? Pretty much guaranteed.
Yeah.
Do you like that? I'm going to get you there. I promise you. Listen to me. And here's why, by the way, this happens. What's interesting is I'm going to say something that's kind of funny. The governments in both U.S. and Canada are the biggest bookies in North America. Because they are subsidizing you for building your business. They provide incentives for you to build your business. And the reason is very simple. It's 3 reasons. Jobs. Jobs and jobs. Small business creates over 70% of the job growth in North America. You know, government knows that from little acorns come big trees. You think, take an example, Apple Computer. You think Apple Computer started with 100,000 employees? No, it started out of Steve Jobs' garage and Steve Wozniak's garage. You think Microsoft started with hundreds of thousands of people? No, it started small. So the government passes good tax laws for small business people. In fact, what's interesting is that we have 2 tax systems in this country. And quite sure. Close. There's one to make you poor, and that's for all the employees in the room. Because you're taxed on $1, and you don't get that many deductions. You may think you do, no. But then there's one who are self-employed. Because if you're in business, if you're self-employed, you get everything that an employee gets, plus you can write off part of your house, your spouse, the equivalent of your kids' education and weddings. I'm not exaggerating when I say that, by the way. I'll get into how to do that. You can set up a pension plan that I promise you makes any government plan look small by comparison. The tax benefits of being in business are great. So the government creates deductions that will generate cash that you never have to pay back. That's the important point. And the way they do this, in fact, let me give you an example of Joe. Joe has a bunch of expenses. He has a cell phone. Now, as an employee, that's not deductible. He has a mortgage or rent on a house. Maybe in the United States, you can deduct interest on your mortgage. You can't do that in Canada, but that's it. You can't deduct rent. Joe drives to work every day, and he spends money on that car, gas, repairs, insurance, and so on. Not deductible as an employee. He goes out to restaurants. I'm sure, how many people here go out and entertain, go to restaurants, things like that? So does he. Not deductible for him. He goes to movies. He plays golf. Not deductible. He has medical expenses that have to exceed a very high threshold in both U.S. and Canada, and other expenses. What if, okay, he were to be able, by having that, because he's in the bad tax system as an employee, but what if he forms a home-based business? Now, some of those deductions, some that he's already spending, become deductible. We call that redirecting your taxes. That's exactly what we call that. And the way this works is, how many people in this room have a rebate card? Anybody have a card that gives you like some kind of cash rebate or points when you buy? How many have a rebate card tonight? I'd say almost everybody does. Okay, let me see if I can see you better without my glasses. What do you get on your rebate? To 50% on everything you buy and everything you do for the rest of your life. All right? Let me say that again. I want to make sure you guys are awake. How many people would like a cash rebate card of 20 to 50% on everything you do and everything you buy forever? That's what I make sure. Believe it or not, you already have that cash rebate card. It's called your business card. Because if you're in business, you get a huge deduction back on all expenses that can be justified as a business expense. If that's what a deduction really is. A deduction isn't cash itself, but if you take your tax bracket and multiply by that deduction, that's your rebate. And generally, a deduction is worth between 20 and 50%, depending on your income and what you're making. Now, here's another question. I ask people all over the country when I lecture, where does your money go? And it's astonishing to me, they don't really know. Here's a study that was done. It shows that the average person in North America spends 20% of what they make every month in debt. 20% of whatever they make is immediately committed money in debt payments. And that includes all debt: mortgage debt, education loans, consumer loans, car loans, everything. And it could be as high as 35%, by the way, but 20 is the average. In addition, there is a day called Taxpayer Freedom Day. And by the way, I am going very quickly. All of this is in TaxBot and blogs and videos, but they only gave me an hour, so I'm really going to move. You want to take some notes here. As I said, in addition, there's a day called Taxpayer Freedom Day, which is a day that the average person in this room has to work to pay off their federal, state, and Social Security, or federal, provincial, and CPP. Anybody know what day that is? One of my seminars thought it was December 28th.
Oh, wow.
Seems that way, right? It's actually, if you go on the web, it's actually April 17th. And it could be more than that, depending on the state you're in or your amount of income you make. But April 17th is the average. Well, if you go from January to April 17th and divide by 365, the average person in North America pays 33% of what they make in taxes. Well, and it could be more. It could be as high as 50. Well, if 33% is the average on taxes and 20% is the average on debt, well, then that leaves you 47% for everything else. Now, what's everything else? Retirement, education for your family, medical, dental, emergencies, food, clothing. If you wonder why we can't get ahead in North America, this is the reason. And in fact, many times people are working 2 jobs because they can't make it in one job. The kids are left alone, the kids are getting depressed, and then all of a sudden you find some of these kids shooting other kids in high school. This is the reason. This is what's going on. This is certainly one of the reasons. Now, here's another interesting question. Who are the biggest tax cheats in North America? Because what I'm about to tell you is going to surprise you. Here's the answer. Business owners themselves cheat themselves out of over $100 billion, that's what it be, $billion a year. Even the general accounting said people are overpaying their taxes because they don't know how simple and easy it is to save huge amounts of money with proper tax planning. And here's another little interesting study. Small business owners overpay their taxes to the tune of about $150 billion a year. And based on my studies with seminars that I do, I would bet that well over 95% of those people didn't even know they're overpaying. Why? 2 basic reasons. One, they don't know. I mean, if you don't know what you don't know, it's not much you can do. But the second reason is procrastination. If they don't have something triggering them to do the right things, what happens? Now forget. How many procrastinators do we have here? Just out of curiosity. I guess the rest of you will raise your hands tomorrow. I like procrastinators. All right, there's a couple of cash strain myths that I want to cover. One of the biggest cash strain myths is really only 7 words long, and yet it causes more people to lose money than almost any other mistake. And those 7 words are, my accountant takes care of my taxes. I have a similar myth, my spouse takes care of my taxes. If you learn anything, learn that. I equate that with a doctor take care of our body. wouldn't it be great if we could eat all the cholesterol and fatty foods, and once a year we go into a doctor's office and we get one of these roto-rooter jobs? Another big myth is my mechanic takes care of my car. Those of you who have ever owned a Jaguar would appreciate that myth. Must be some Jaguar owners here. Oh, by the way, Jaguars were interesting. They were the only cars in the world that had more vertical mileage than horizontal. What do you think about that one? Now, don't get me wrong. I think having an accountant is not only important, but essential for small business owners, particularly in one of IRS requests to run your business like a business, which we'll get into. But they don't, if you don't know what to tell them by December 31st and have them, there's not much they can do for you. Now, some of you may have seen me at some of these big mega events. I was with Tony Robbins and Donald Trump and General Schwarzkopf when he was alive and some others. And I had a gentleman come up to me and he said, Mr. Botkin, I loved your program, but I pay taxes. I get a refund. He didn't realize he was getting back his own money. I had several people say that to me, and I got so perturbed by that, I decided to figure out, show people how much they're really paying in taxes. Now, I like to prove everything I'm saying. As an IRS attorney, I'm very skeptical, so I like to prove it. So what I did is I took a single individual in the United States, and I assumed he made $50,000 net of all his deductions, exemptions, and everything. On $50,000, he is paying $12,917 in federal, state, and Social Security taxes. His withholding was more than that. Now, why is withholding more? Because the government likes you to feel good when you get some money back. It's like this guy. But even though he got a refund of $1,568, he still paid $12,970 in taxes. Everybody see that? In this example, he paid 8% of his income in taxes. Somebody makes $100,000 of net of their deductions, pays 32.4% of their income in taxes, and somebody making $250,000 a year net of their deductions pays 37.7% of their income in taxes. And believe me when I tell you, it could be as high as 50, depending on your income. It's very surprising. So you are paying this amount. There's a lot of money you're paying. Now here's another question I have for you. What is the difference in the tax benefits and fringe benefits you can give yourself between a home-based business and, say, what a Fortune 500 company can provide their employees? Here's the answer. None. You get the exact same benefits as a Fortune 500 company can provide to their employees. Same benefits, same tax benefits. Second myth. I only work my business part-time. I'm not a full-time person here yet in Nu Skin. Do I get the same tax benefits? Yes, whether you're full-time or part-time, you get the exact same benefits. Now, thirdly, I'm not making money yet. I just started my business. I'm not making money. Well, the tax benefits, what kind of tax benefits are there for me? Are there any benefits for me? And what's very interesting is that the government subsidizes, remember I said the government is the biggest bookie. The government subsidizes you and gives you incentives to build your business. And how do they do that? If your business generates a loss, that loss in both US and Canada can be used against any form of income you have. Interest, dividends, wages, rents, pensions, anything. So let's take an example. Let's say you make $50,000 a year in your job. Your side business generates, your Nu Skin business generates a $10,000 loss the first year. You net it out. You only pay taxes on 40. Let's say that loss exceeds your whole income for the year. You're a single parent and exceeds your whole income. Watch this. Talk about subsidy. The government allows you to carry back all business losses 2 years and get a refund from the federal and state governments for the last 2 years of taxes that you pay. You actually get a check. And for you Canadians, you got even better. You can carry back your losses 3 years. Or you can carry forward all business losses in both the US and Canada up to 20 years and offset the next 20 years of earnings. That's what I'm saying. The tax benefits for business are enormous. And you might wonder, why does the government subsidize you? Because they know a big tree may grow. Plus, they can get paid for the rest of your life. It's a very good investment for them. It really is. Now, here's another question that I have for you. Let's say I gave you a choice between receiving a $17,000 raise every year for the next 10 years. Every year you're going to get a check for $17,000. Or I will wave my magic wand and save you $10,000 in taxes every year for the next 10 years. Which is better? Which would you take? How many would take the $17,000? How many would take the $10,000 in taxes? Because you know you're in a tax center, that's why they raise you. That's actually the right answer. said because by the time you pay federal, state, Social Security, or federal CPP and provincial on $17,000, you're actually left with less than $10,000. Saving $10,000 in taxes is like getting almost an $18,000 raise. It's that good. Now, in the next, we're going to literally a few minutes a day, and that's going to be my focus. Now let's talk about vehicles. How many, when you pay for gas, how much is gas these days? $3.50, $3.30, if you buy premium, $3.70. How many people in this room would love to buy gas for the equivalent price of 11 cents a gallon? Do you like that? Yeah. Watch this. I'm getting that. Let me tell you how. There are two ways of writing off a car. Because when you get a deduction, that's effectively what's happening. One is the government method, and the other is the actual method. The government method is in lieu of most of the things in the actual. Now, what is the government method? In the United States, IRS gives you 56.5 cents a mile. This is the 2013 numbers, by the way, folks. I'm giving you the latest information. 56.5 cents a mile for every mile you drive for business. In addition, they give you 24 cents a mile for medical and moving. Every time you go to a doctor, every time you go to a dentist, you should be claiming 24 cents a mile round trip. If you move to a different city, 24 cents a mile. And here's something that many Americans miss. I don't know why they do it. The government gives you 14 cents a mile for charity. I met a guy who serves on his church choir. He should be claiming 14 cents a mile round trip every time he goes into that choir practice. In my neighborhood, there's moms driving their daughters around selling Girl Scout cookies. I'm sure many of you have done this. I'll bet this is something you didn't do. Those moms should be claiming 14 cents a mile as a charitable deduction. I get all kinds of people coming to my house. They must know I have Samoas. That's the problem. But that's the point. People are missing this. And if you're not taking this deduction, you are overpaying your taxes. And by the way, who has the burden of proof of showing that how many miles you drove a business? Does the government have that burden of proof, or do we?
We do.
We do. From our tax tracker and tax organizer, and I'll get into that. Now, in Canada, you have also something simple. You have a choice between the actual method, or you can use the government method. The government method in Canada is 53 cents a kilometer for the first 5,000 kilometers and 47 cents for every kilometer for business after that. Now, let's see how this works. Let's say I drive, and how do I get gas for 11 cents a gallon? Here's why. Let's say I pay $3.50 for gas, and I get 20 miles to the gallon on my car. I drive 20 miles for business that day. Under the IRS method, you get 56.5 cents a mile. That's $11.30 in deductions. Assuming you're in the 30% tax bracket, you multiply that by the deduction. 30% of 130 is $3.39 cash saving. That's what you get as a result of that deduction. Well, if you're getting a cash savings of $3.39 and you're paying $3.50, you are effectively buying gas for 11 cents a gallon net of that deduction. Everybody understand that? Yeah. That's exactly what's going on here. Now, also, what is the actual method? The actual method is where you take part of your gas, your oil repairs, your insurance, your wash, your wax, depreciation, and so on. So if you use a car, 90% for business, 90% of all these things are deductible in lieu of the IRS method. So if I pay $20,000 worth of total expenses for my car, I use it 75% for business, I wrote off $15,000. Here's another tip. You go to a personal stop, you want to take your kids to football games, tutoring, you want to see your mom. That's normally personal. So you ask yourself, do you have a business stop you can make nearby? Maybe a client, a prospect, an opportunity meeting, something nearby. By doing that, a substantial part of that trip comes deductible. Maybe all of it if he or she is nearby. And by the way, your mom doesn't have to live in the same city you're in. If you have a mom that happens to live, say, in Hawaii, and you go to Hawaii to try and line up the tributes, that trip is quite deductible if you do it right, even though you're seeing your mom. Now, there's something that a lot of people miss. I have a person in Anaheim who's going to get back $6,000, he thinks, as a result of this. This is a big deal. The IRS method and Canada Revenue Agent method is in lieu of the actual expenses, in lieu of gas, oil, repairs, insurance, wash, wax, depreciation. But you do get two things that many accountants don't know. Number one, you can deduct sales tax to the extent that you use your car for business. And you can deduct interest on car loans as well. How many people in this room have bought a car while they were in business, paid sales tax and or financed the car while they were in business at some point? Anybody? How many people feel that your accountant may not have deducted either the sales tax or the interest or both? If you think your accountant may not have deducted that, raise your hands. Look at this. Look around you, folks. This is particularly true if you use the IRS method. Many accountants didn't know that that's available. If you think your accountant didn't do this, you can file amended tax returns for up to the last 3 years you've been in business and get a deduction for these things. I know someone who's getting back $6,000. Seriously, this is a big deal. Now, here's another big deal for those of you in business, which is everyone. One of the big winners in the American taxpayer relief law are if you buy a brand new truck or a used truck, new or used truck, that has a gross vehicle weight of over 6,000 pounds and has a truck chassis and only has a front seat for the driver and passenger, you can write off 100% of the cost of that vehicle this year to the extent you use the business. 100%. That applies no matter when you bought the truck, and it applies to this year and last year. A qualifying van also qualifies as a truck if it has 9 or more passengers. So the big winners are new trucks with gross, or used trucks, you are used, have a 6-foot cargo area and has a gross vehicle weight of over 6,000 pounds. How many people here bought an SUV this year or last year? I have great news for you. If you buy a new or used SUV, you can elect to write off $25,000 of the business use of the SUV, no matter when you bought it in the year. In addition, if you buy a brand new SUV this year, you also get, or last year, you get 50% bonus depreciation, which means you write off 50% of the remainder, plus regular depreciation. Now, what that means to you is very simple. For those of you who bought an SUV, especially a new one, last year or this year, you'll be able to write off 80% of the business use of that vehicle or more. You need to make sure your account's going to do this. All right, that is available to anyone who bought an SUV. And what's an SUV? An SUV carries passengers, has a gross vehicle weight of over 6,000 pounds, and has a truck chassis. Those are the rules. All right, let's talk about entertainment. And I'm giving you, as I said, about a 30,000-foot overview of some of the information in TaxBot, but that's why we take some notes. With entertainment, here's my question. Who are potential prospects in your business? Who are people who can give you referrals? Everybody! Are your best friends potential prospects? How about your adult family members? How about your next door neighbor? How about other networkers? Sure, they can lose weight. Anybody. Well, if everybody's a potential prospect, let me ask you a question. How can you ever have a non-deductible lunch with someone? You can't. And if you're not writing off every single meal you have with someone, I would like to suggest that you are losing thousands. I mean, think about it. Think about these wonderful tax lists for small business. You can literally eat away your taxes. Yeah, by the way, you know, many of you see television commercials out there. Now, all these companies that do these television commercials, they know everyone watching the commercial is not going to buy their product. In a sense, this is your commercial. You are talking to people. You are spreading word. And you're accomplishing two things, by the way, by doing this. Number one, you're promoting your business. And number two, you're establishing to IRS and Canada Revenue Agency that you can, you're in business, you try to make money, like a business. Now, in both US and Canada, you can deduct 50% of your meal as well as 50% of your friend's meal. That's the rule, 50%. Now, let's talk about something else. There's something called associated entertainment. This is what it says in the Internal Revenue Code and the Parliamentary Code. Now, what I'd like you to do, when I say the word associated entertainment, most people don't know what I'm talking about. They look at me like I have three heads. I want you to write down the word associated entertainment, and I want you to put an equal sign and write down the word fun. Fun. This is where you're going to a movie. This is where you're going to a play. This is where you're going to a football game, a ballet. Do we have any golfers here? Anybody here a golfer? Golf's an expensive sport, so if you can write it off, you get twice as much fun. Right? Both in the US, in the United States, and Canada. Canada's a little more limited because they don't allow you to deduct green fees in Canada, but you can still depreciate your golf balls, golf clubs, and caddy fees, and so on. But in both US and Canada, they allow you to write off 50% of your fund as well as 50% of your friend's fund if you have to pay for them. Otherwise, you just write off 50% of your fund if you don't pay them. And here's the rule. If you talk business, again, this is not Sandy Bodkin, this is in the regulations. If you talk business within the same 24-hour day as the fund. Does that give you enough time? Okay, watch this. Let's say that you were to go out to drive to a football game and you talk business with that prospect in the car, and while you're there, your intent is to talk business. Is that talking business within the same 24-hour day as the fund? You drive the game. Yes. Someone, and you talk business on lunch, and you say, you know, it's such a beautiful day, Sandy, what do you say to go play golf? And I'll say, well, show me how to play, I'll go with it. And I might have a 300 handicap, but I'm going. Is that talking business within the same 24-hour day? In other words, we're talking business over lunch, and then we go play golf. Is that done within the same 24-hour day, everybody?
Yes.
Yes. Here's the problem. Who has the burden of proof of showing that we talk business within the same 24-hour day? We do. How do we do it? From our tax organizer or tax tracker. That's how we do it. All right, let's talk about a home office a little bit. How many people have heard that if you claim home office deduction, it just isn't worth it, and you're probably going to get audited, and you just shouldn't do it? If you heard that by someone, please raise your hands. They show up their house, right? I'm here to tell you, first of all, in 1999, Congress liberalized the home office rules for home-based business people and small business people. I'm here to tell you that if you are eligible for home office, most of you can be, you are crazy if you don't take this deduction. Absolutely crazy. And I'm going to show you how to bulletproof it, all the things you need to do from the government. To give you an idea of how a home office works, let's assume this is my home. I have one bedroom I use for business, and let's assume that bedroom represents 1/8 of the total square feet. And it could be a little more, maybe less. I'm just picking a number. Now, what does that mean, guys? 1/8 of the utilities then become deductible. Before, you couldn't take any deduction for utilities. Now they are for the home office. In this example, 1/8 of the interest becomes business interest. Could reduce your Social Security and Medicare. And for you Canadians, this is even better because you can't deduct interest in Canada. But with a home office, you can, part of the interest. 1/8 of the property taxes become business taxes. 1/8 of the house can be depreciated. I have people saying to me, well, Sandy, what if I don't own a home? Let's say I rent a home. 1/8 of the rent can be written off. 1/8 of the maid service. 1/8 of the alarm service. 1/8 of the insurance repairs. This is a big deal. The value of a home office is generally about $10,000 to $15,000 in deductions a year. That's a year. So, what do we need to do to prove we have a home office? First thing, there are 3 rules for the U.S. and Canada, and probably other countries too. 1, you've got to use an exclusive portion of a room for business. It doesn't have to be a whole room, just part of a room. Here's the problem. How do you prove to the government that you use part of your house for business? How do you prove that? I bet you never heard this from your accountant. Take a picture. Take a picture of the home office. Date the photograph, but whatever you do, don't send the photograph with your tax return. You laugh. Somebody did that. When I was in IRS, somebody did that. And in the picture, they were, unfortunately, I guess they couldn't help themselves, they were making some undesirable hand and arm gestures. I thought it was kind of funny, but not everyone in IRS has a sense of humor, okay? Number 2, you want to work your business regularly at home, which means at least 45 minutes to an hour a day, 4 to 5 days a week. It's much more important to work it regularly than once every 2 weeks at home. And that's also true for working your business like a business. That's one of the rules too. And you want to have your home as your principal place of business, which means that's where you do your administrative work for your business. If you meet that, you meet the home office rules. By the way, I want to show you something here. We have about 700 people in this room. How many people in this room knew from their CPA, or their CA if you're in Canada, A, that you can deduct 50% of your fund, and B, knew about the requirement that you have to document your fund, you have to talk business, within the same 24-hour day as the fund? If you knew that from your accountant, please raise your hands. Keep your hands up. I want you to look around you how many hands went up at 700 people. Okay? Very little. Now, here's something that you're going to love. How many people in this room have children or grandchildren that may go to college or may get married in the future? Almost everybody. A lot of times people ask me, are college educations deductible? I'll give you a hint. What's the answer? No. Are weddings deductible? No. If you were to pay for your son's car, is that deductible? No. If you were to provide room and board for your daughter, is that deductible? No. Pay for video games, Wii's and Nintendo's, is that deductible? How many people in this room would love this hour if I can show you how to write off the equivalent of every single thing I just said? You like that? You're in for a treat. There's actually 5 ways to do it, too. I'm going to give you 1 out of the 5. You know, I promise you, as I said in the beginning, you are overpaying your taxes, and nothing is more valuable than tax knowledge. And you'll see my point. Normally, paying for college education, weddings, all that is non-deductible. But if you were to hire your kids or grandkids or niece or nephew in your business and pay them a reasonable wage, are reasonable wages you pay an assistant in business deductible? And if they use that money to pay their own college, their own wedding, their own room and board, aren't you in essence getting a deduction for those things? It's the same money, but in one case you went from non-deductible tuition to deductible wages. Everybody understand that? Now, in the United States, the first $6,100 they earn is income tax free too, because they get a standard deduction on their own tax return of $6,100 against wages. So you get a deduction and they get that money tax free. In Canada, it's even better. It's like $9,000. So it's like a single equivalent amount. It's just enormous. Let me give you an example. If you learn what I do in my life, you can do the same thing. My daughter majored in digital design, which is basically like web design with some motion. And I needed a new website for my TaxBot website for my other company. And I got a quote from a website company, which was fairly high. So I called up my daughter, Allie, and I said, all right, Allie, I'd like you to do my website. Can you do these things? She said, yeah. Fine. Here's what I'm going to pay you, which is a little less than what the other company quoted me, to make sure it's reasonable. I was able to deduct almost the equivalent of 4 years of her college tuition. 4 years. I was saved tens of thousands of dollars. If you're not doing this, you are overpaying. You gave it to you, how much it cost, what the product was, and the date you gave it to them. Now you can deduct part or all of that monthly purchase. All you have to do is document you gave it away as product stamps. All right, let me give you a new business owner example. Joe has cell phones of $120 a month for cell phone bills. How many people in this room, anybody have a cell phone bill of at least $120 a month for themselves and their families? All right, so these are not aggressive numbers here. I'm saying a lot more for my whole family. He used it 90% for business, so 90% of 120 is $108. He's a 33% bracket, so you multiply, you take your tax bracket times the deduction. That translates to $35.64 in cash in his pocket. In addition, he has rent or mortgage of $2,000 a month. 20% of that house is used as a business or office. $400 is the deduction. He puts another $132 in cash in his pocket. We assume he has utilities of $400 a month, and which a home office 20%, so that leaves $80 a month in utility deductions. In cash, that translates to $26.40. He eats out. He spends $200 in meals in a month, we're assuming, and $200 in fun. I've had people come up to me, in fact, backstage. Somebody came up to me and said, I spend more than $400 one day for fun. I mean, I can go out to a restaurant and spend that. But this is a month. I want you to understand that I'm being conservative here. If you're on both US and Canada, you can deduct 50% of that. So 50% of the meals and entertaining is $100 each. If you're in the 33% bracket, that puts $66 total in your pocket for those two per month. And we'll assume you drive 200 miles a month for business. That's only 7 miles a day, by the way. At 56.5 cents a mile, that's $113 in deductions, resulting in a $37.29 in cash. Now, what does that mean? What that means is just based on these 6 deductions alone, you are putting, from the tax system alone, you are putting $297.33 in your pocket. Does that pay pretty much for the monthly purchases? You can basically bring people on and almost guarantee them a profit just from the tax system. On an annual basis, that's $3,568. And this is just 6 deductions. I have hundreds that I talk about on TaxBot, for example. This is just 6. Now, this, as I said, this is just the tip of the iceberg. Let me back up for a minute. There are other things like how to write off all of your expenses, including business mileage. Keep backing up here. There we go. How to write off the equivalent of your kids' education, weddings, or 5 ways to do this. How to deduct 100% of your medical expenses as a business expense. How to deduct your fund, including season tickets. One of my favorite things is how to deduct all the equipment you use in business twice. Not once, twice. How to turn your vacations into tax-deductible events and create a retirement plan that beats any government plan and a lot more. Now, how do you stay compliant? Very simple. 1, you have to start keeping meticulous records, the way I'm going to mention today, and you want to learn more about tax deductions. The key is getting redirected taxable income, converting some of that money that was totally non-deductible to deductible dollars. You know, you're spending $5,000, say, let's say you're paying $5,000 a year in taxes. Wouldn't it be wiser if you can convert some of that to now the good tax system so you can get some cash back from that? That'll subsidize your business. And that's why I think millions of smart homeowners and smart people are joining home-based business today. Now, remember when I talked about this cash rebate card? All cash rebate cards have rules. Some of them have pages of rules. This one only has 3 rules. The first rule of conduct is that you must run your business like a business and not like a hobby. And I got a whole video on this. So what is that? Here are some of the criteria. Business people work their business regularly. You want to write this down. This is very important for US and Canada. That means at least an hour a day, 4 to 5 days a week. That's much more important that you do that than say once every 2 weeks for 8 hours or 12 hours. Business people, if they're not making money, what do? They contact successful people to find out what they need to do to become successful. In your case, you would contact your upline. If your upline doesn't know enough, you contact your upline's upline. That's what they're there for. Everybody's there to help you. That's one of the great things about this company. And they document what the upline said, and they follow their advice. Business people go to seminars like this, whereas hobbies don't. Business people have an accountant. That's something I strongly recommend. And they develop financial statements every single year. If they're not making money, they go over and meet with their accountant to figure out where they can cut back. Business people have the right documentation. They have tax trackers and tax organizers. Hobbies do not. The point is, the government doesn't care if you're making money. They don't. All they care about is you're trying to make money. That's the key. And you want to track your expenses according to both IRS and Canada Revenue Agency standards. Now, if you don't have good records, then you're in trouble because you get audited and you're in trouble and not maximize your savings. Here's an actual tax organizer that I used to recommend for years. It's a paper organizer. This you have to write down for entertainment what I call the 6 questions. Who, what, when, where, why, and how much. Who? Nick and Carol Hillman. What? Meals. Where? I went to Palm Restaurant, Washington, D.C. We then went to have fun. We went to the Ford's Theater. Why? I asked for referrals. They gave me the name of Johnson. And how much? $200. By doing this, you will never have to worry about IRS or Canada Revenue Agency audit again. You will have that peace of mind of being basically bulletproof for the rest of your life. And how long does it take to write these things down? How long does it take? A minute? A minute a day to keep IRS and Canada Revenue Agency away, basically. So it is. Now, one of the biggest problems is lost and faded receipts. You have a receipt. This is an actual example of my receipt. It was 1.5 years old. I can't even read it because they're faded. It's on thermally treated paper. And if you don't have that happen to you, you won't get a deduction for that. And a lot of people think, I was just at a seminar yesterday, and they say, oh, what about credit card statements? The problem with credit card statements is, think again, you need more information than credit card provides. Because in tax law, you are guilty until you prove your innocence. Isn't that the American way? Now, how do you solve this problem? I have been working on this for 6 years, and I want to emphasize something here. I am not a documentation nut. I do not like documenting any more than you do. I don't. But you know one thing I can do is simple and easy. That I can do. And I have been developing something called TaxBot. It works on the iPhone, the iPad, the Droid, and the Droid tablets, and the web. It is a fusion of tools and education. It will save you, and it's been proven now, thousands of dollars a year in under 2 minutes a day, I promise you. How many would love to be able to save thousands of dollars every single year under 2 minutes a day? That's what you're going to put in those 2 minutes, okay? That's me too. The way TaxBot works is, number one, it instantly stores your receipts for you by snapping photos of receipts, answers simple questions, and bulletproof you against even the smartest auditor. In addition, with TaxBot, it has an expense, all the questions that IRS and Canada Revenue Agency require right in front of you. What it is, it has 2 buttons, expense and mileage. You press expense. You will get a whole list of categories, all customizable and all editable. You can edit everything. Let's say I have a lunch. I press meals. And the minute I have meals, all the questions pop up. For what? In this case, I wrote meals automatically came up. Business purpose. I type in why did I take the person out? How much? I type in my bill. Where? In this case, you went to Chili's. Or I go to Tim Hortons. When? The date is already in here and I am bulletproof. Now, what about receipts? There's an integrated camera, sort of like a scanner, where you attach receipts. You take a picture of the receipt, it attaches it to the documentation, and wirelessly stores it on the web. So it doesn't matter what happens to your phone.
That was my next question.
Oh, you like that? haven't gotten to the best part yet. Really, watch this. You know, one of the problems with the automobile is a huge, big ticket item. And you gotta do a lot of things. You gotta have the beginning mileage, the ending mileage, odometer. You gotta show why you went there with the mileage. Here's what I did. One button. This. I press add mileage. It has an integrated mileage tracker with a GPS system. So what it does is you'll see a map right in the middle. The minute you get to your destination, it'll follow you around. You get to your prior appointment, you press end trip. It will automatically give you the starting address. You don't even type that in. Automatically give you the ending address. Automatically give you the mileage or the kilometers if you're in Canada. Automatically give you the dates. All you type in is Y, and you are bulletproof. How's that for easy? Oh, and then and we even go to something else that's cool. What do you do if you forgot to turn on TaxBot? Feature just added that has you put in the beginning address on the web. Right now it's available only through the web, but it will be available through the phone as well. You go on your website, you put in your account, you put in the beginning address of where you left, the ending address of where you arrived. It will automatically compute the route and show you a line as to what route you took. And if you want to change it, you just put your mouse on it, you can actually change the route and recompute the deduction. I mean, it's a very cool thing. TaxBot also has an integration with your bank credit card or bank account. Now what that means is this. Let's say you write a lot of checks, you charge some business expenses. It's not on TaxBot because you charge it on your credit card. You didn't record it for some reason in TaxBot. What TaxBot will do is it will scan all the expenses on your credit card or bank account. It'll look at TaxBot to see if you recorded it. If you didn't, it'll send you a message with the expenses that aren't on there asking you if you want to add to TaxBot. Isn't that cool? And then you can add it. By the way, you'll eliminate paperwork and it will save you tons and tons of time. I'll tell you that right now. Now, a couple of warnings I want to emphasize. Oh, by the way, you also get a secure web portal on the cloud. You track it, we store it. The records are stored bank-level security according to IRS and Canada Revenue Agency standards. You can edit records, you download the reports for your accountant, you can put it on a memory stick, you create reports with graphs, all kinds of things. You have all this stuff. By the way, I want to emphasize, TaxBot is like a BMW. There's more under the hood than it seems. For example, many companies will tell you they store your records. We store it in several different locations in several different cities. So we really have good storage. The point is, all your records, all your mileage logs, all your entertainment, all that stuff is all stored securely in a dynamic web portal, accessible 24 hours a day, 7 days a week, that you never can lose. It's on the web. If you lose your phone, don't worry about it. And it works on all kinds of different devices. Oh, by the way, another thing about TaxBot. You don't need multiple TaxBots. It works on 3 different businesses with 3 different cars. Which means you can have an account, your spouse can have an account, your kid can have an account, and you all get separate reports all on one account. Okay? So I want to emphasize that. Now, so you never really have to worry about losing your data. Now here's something that I think you're going to really like. TaxBot actually shows you, and I want you to think about this because the implication of this is enormous. TaxBot shows you in real time how much you are generating in new deductions. In my case, my iPhone, I generated $15,060, almost $69 as of April 12, 2012. Now what does that mean? See that figure? That's what it costs your downline distributors if they ever quit the business. Does everybody understand that? Talk about reducing attrition. That's exactly why it's there. Now, in addition to all of this, I'm very well known for providing tax and financial training. And I provide that all over the country. We have over 40 videos, 3 to 5 minute videos. We have over 275 blogs on all kinds of things. For example, my latest bunch of blogs is on the new American Taxpayer Relief Law that just came out. There's 9 blogs on it. I have how to get in-state tuition for an out-of-state student, how to evaluate a nursing home for parents in independent living facilities, and a lot more. By the way, you Canadians, I did something special for you Canadians. You get my Canadian Tax Advantages of Home-Based Business audio set with the book downloadable for free. I gave you a nice little deal because a lot of my blogs are from Americans, so I want to give you something special. Now, I do want to give a couple of warnings here as well. Never give tax advice unless you're an accountant or an attorney. You know, we have webinars, we're going to have videos to help you accomplish this, so let's do it for you, okay? That deal? And also, I want to mention one other thing. The tax system is tremendous. The tax benefits of being in business are enormous. But they are just the icing. The cake is your business. You happen to have a terrific company with terrific products that's stable. I mean, you've got all kinds of good things going for you here. So again, I just want to emphasize the company is the cake. The tax benefits are the icing. Now, how do you recruit, retain, and make money? Number one, you want to get signed up with TaxBot. You want to save thousands of dollars yourself, and you want to show your recruits and prospects why they can never afford to quit. It's that simple. You know, there's an old saying, ignorance is bliss, but it's also very costly. You have choice. You can spend 2 minutes a day, and hopefully I've convinced you that you're overpaying your taxes by thousands, complaining about your taxes, or you can put the same 2 minutes a day reducing them. One will cost you aggravation money, and the other will put a lot of cash in your pocket. And you give yourself a great return on taxes. Now, TaxBot is only $9.95 a month. That's what it is. It is fully tax deductible, so it doesn't even cost you $9.95. It's one of the few things you can do personally. So you're getting that 20 to 50% rebate. So it's about $5.50 after tax. What is that, 18 cents a day? But for those of you who are fit executives, how many are fit executives or higher? If you are fit executives, LisAnn is paying for you to have it for free. How's that? I've never seen a network marketing company do that. All right, that's what I call a good deal. And for those of you who want to become, how many want to become fit executives? Well, you do get it for free too. Okay? So I want to emphasize that. Now, a couple other things. First of all, I believe that the American dream of financial independence has been alive and well. And that's why I wrote my book, Achieve Financial Freedom Big Time, which I recommend to all of you. It is very easy. In fact, I don't think it's ever been easier to get into a home-based business, and because of the tremendous great chance of success that you have today if you didn't have new tools like TaxBot and many other things are really making it easier. I want you to think about it. You go into a home-based business, you have no cost, you have no overhead, you can do it part-time, you can earn while you learn. I mean, really, what is there not to like about it? Whereas you go to a traditional business, you got large business expenses, large amounts of overhead, liability, which you don't have in a network marketing business, inventory. I mean, there's no comparison in terms of the risk and the stress. I can't emphasize enough the tremendous benefits of being in a home-based business. These are incentives set up by the government to subsidize your business to get started. The problem is that what I see is that many people end up quitting well before their business takes hold. That is a huge mistake. You know, the government gives you tremendous tax benefits as long as you're in business. Just keep working it. So why ever quit? You're getting all these thousands of dollars of tax benefits. It doesn't make sense to ever quit. All the government cares about is you try to make a profit. They know you're probably not going to make money the first year. Just try. And by doing that, you get all these great benefits. So my suggestion to all of you is never, ever quit. Let the tax benefits work for you. Plus all these major tax benefits. I mean, why do you quit? It doesn't make sense. You know, home has always provided comfort and shelter. And it also now provides financial security. It's never been easier, I think, in many ways to be in business for yourself, but not by yourself. You get a lot of help, particularly in this company, to encourage your dream of a secure financial life. I think it's ironic that a lot of people look around madly for searching everywhere for success and searching everywhere for financial security, when that success and financial security is right at the doorstep the whole time. Maybe Dorothy was right in Wizard of Oz. There is no place like home. I look forward to helping all of you show your prospects the tremendous value of being in a home-based business, and I promise we're going to make your life a lot less taxing with TaxBot. Thank you.